G'day traders, Mindset Reset. Today we'll answer some questions. We're going to talk a little bit about the beliefs, mindset, and behavior of the trader. And we're going to talk about understanding the trades that you trade the best, the trade setups that you trade the best. So the ACB template has shown up twice this week already. Natural gas, an explosive ACB template, which also gave a day 2 trade ACB template. And we had an ACB template on the DAX in the London session, which by definition went to the close of the day on both days and both instruments. Absolutely massive opportunities, returning greater than 10 to 1 for traders who executed those setups. Rinse and repeat, scale them up in size. Those are scalable trade setups. And I'm going to be putting up in the next module a new PDF with 10 of the best ACBs, long and shorts, and they're identical setups on different instruments that all return greater than 10 to 1. The challenge for traders is to be patient and hunting out those opportunities when they present. They don't show up every day, but we don't know when they're going to come, and we don't know on which instruments they're going to come. So obviously there's a criteria, a daily routine just to skim through instruments. My son is home from university for a week, and we were going just back and looking at the trades that he took in January and talking about the DAX setup today. Just, he's got a really simple model. He's still kind of, doesn't understand everything, but he understands entry, stop loss, walk away. Now, he is not at home sometimes when the market goes to break even, and I've encouraged him not to worry about that too much. If he's got the right template, he has nothing to worry about because it's hold till close. Now, we looked at some of the historical charts today that give the ACB templates, because he knows I've put this together for him, primarily. And one of the things that he asked me today was, why would people want to try and trade those other charts? And I said, well, that's a great question. Now, I know that I make jokes about science projects a lot, because science projects can show up every day and there are people trying to trade them. And they got the move. They caught the move. They caught the high. They got the low. And he said to me, he goes, yeah, but why would you want to even bother with that when all you have to do is trade these types of setups? And I reinforced to him that if you just hit 1 or 2 of those a month for the next couple of years, your account will skyrocket by doing nothing else other than, as your account increases, gradually scaling up your position sizing, maintaining your same model, entry, stop loss, hold till close. So one of the questions I got today was, how do you differentiate a nail and bail and hold? And the obvious answer right off the bat is, if it's not an ACB setup, it's a nail and bail. Now, you're going to have first red day, first green day that go on range expansions, but typically a lot of those will come out of coiled markets, which also will give an ACB template, a 3-session coiled market that explodes and continues in the direction of the first green day signal or the first red day signal. The whole point with all of this, and I'll tell you my perspective as time keeps moving on, is I don't want to, like I always joke, Steve and I always joke, thinking is for idiots, because the more you have to think and analyze and put levels and gaps and sweeps and hunts and all that sort of stuff, there's a lot of people who don't like that I say that, but it's the truth. Like, I have zero interest in that, and I'm not very good at trying to catch little moves all over on the 1-minute chart all the time. I'll use a 1-minute chart on an ACB setup, absolutely. Or I'll use a 1-minute chart on a nail and bail setup when I have everything coiled and ready to explode. But other than that, I don't want any science projects every day that can typically get traders caught into the wrong conditions on the wrong day. And as I repeat, I always ask myself this every single time I look at the chart. I go, is that a scalable setup? If that's not a scalable setup, realistically, do I need to take that trade today? Because it's 50-50. If it's not a scalable opportunity and it can't rinse and repeat without science and laboratory work, I consider that a 30-70 for me. I consider that a 30-70. And there are people out there who will teach you that you just got to keep getting better. You got to keep getting better. And I keep encouraging people to reduce, simplify, and get rid of, and focus on the setup. Focus on one setup 10,000 times rather than trying to do 10,000 trades once each. Today's a science project. Tomorrow's a different science project. But I'm going to try and trade them because I'm trying to get better at trading science projects. And my son just kind of laughed and he shook his head and he's like, that's ridiculous. And I totally agree. First red day, first green day, inside days, and 3 days of breakout traders will always culminate in a trade setup on a well-engineered template as an explosive coiled move, which is why they go parabolic. Now, one trader said, how do you differentiate between a nail and bail and a parabolic? The nail and bail is the parabolic. It's a session parabolic versus a monkey hammer like we saw in the DAX. Natural gas is a one-day counter trend in a market that's in breakout from the opening range. It's breaking out. It's reversing last month's range, and it opened on Monday in breakout, coiled sideways, and continued the move. And exploded on day 2 with a range expansion equal to day 1, going back after monthly highs, last month's monthly highs on natural gas. But here's the thing. Regardless of how you like to trade, is it reproducible? Is it simple? Is it scalable? How good can you reproduce the same conditions in terms of finding the instrument or your setup every day? And when is your scalable opportunity? So one of the things I want to ask traders when they say they caught that, they'll tell me, I caught that trade yesterday. If it was a 10 to 1 ACB, did you scale into that? Or are you trading it with 1% risk just like you do on the other ones that you catch moves? Because the whole point of the ACB is to be scaling those as your skill set, your confidence, and your ability to execute in live time continue to improve, and you're scaling those up. Those are the ones that require zero thinking, zero emotion, zero stress, and zero management. And they're hold till close. Meaning that if you scale into that, if you want to go to break even after it closes through a level, but then let that run, and it's a range reversal or range expansion. So if you go and look at those ACB templates, indexes, metals, energies, those are typically going to return over 10 to 1. I'm not talking about catching a move. I'm talking about the ACB template setup. So a lot of people keep calling moves now ACBs, and ACB is a specific template that is hold till close. And as I've mentioned before, the simple model for my son is going to be checking on Wednesday at 5 p.m. New York. That's the simple reproducible model for him at this stage. And if he misses natural gas on Monday, if he misses the DAX in London on Tuesday, does it matter? No, but he can learn from studying those because the exact same template will show up on Thursday when he gets his instrument basket giving him a signal. One day he's going to get the exact same setup. So some traders still struggling with understanding that. They're trying to use the EMAs every day. And I'll say this again, setup first, confirmation with the coiled sideways market, then your timing window and the coil in that order. If you have your coil up there when the day starts or when your session starts and you're looking for trades with the coil, that's not the ACB template. Now, some traders today on the DAX, I call that like, well, there's year money. There's year money for certain traders on the DAX today. That was an absolute textbook perfect reversal. And building your muscle memory requires just simply doing nothing once you've mastered that and just being patient and willing to sit on your hands. Let the market confirm its entry. When it starts to move without you and traders chase it and then bang, it pops up. There's a lesson there. Let it pop up and coil. If it breaks out again, like it did on the DAX today, if it's a reversal, guess what? Let it reverse. Your job is not to try and catch the high. That could keep going. Let the market set up for you. There's no hurry. If it's going ACB, guess what? You got plenty of time. You got plenty of time. Sit on your hands and wait. If it's breaking down without you, let it pump up. Let the market set up for you. It requires zero management, zero thinking, and zero emotion, zero stress for him because he doesn't have a whole lot to stress about, really. The big thing that I've encouraged my son to do is just stick to the routine of checking Wednesday afternoon, 5 p.m. or Wednesday evening, whatever he wants to do, just running through he's got a list of 10 and which ones close and give him his signal. And then on Thursday, does he have one setting up when he gets up in the morning? Has any started to set up, or does any have the signal and are setting up? And if they do, how does price behave once we get into the timing window? No major red news. One trader asked yesterday about a Thursday trade on NASDAQ a couple of years ago. It was a CPI Thursday. My son knows FOMC, NFP, CPI, any other high impact major red news on that day. For him, he doesn't trade it. And even if it's a well-engineered template, don't care. I just tell him not even bother looking. The whole point for him right now is to build his skill set up on the same rinse and repeat setup if it shows up. And then as he develops that understanding and he studies the other ACBs that show up on any other given day that are exactly the same, they're exactly the same. Whether it's a Monday, Tuesday, a Thursday, Friday, or a Wednesday. And as I've talked about, depending on the major red news calendar, it can affect sometimes, as we saw last Friday, we saw ACB reversals on gold, copper, and silver, I believe, if I remember correctly. And sometimes the calendar will throw that out. Sometimes we'll see an index reverse on a Wednesday. We saw a monster a year and a half ago, and we can see it on a Friday. Just so it happens, just so as it plays out. That's what those setups are. And lastly, in closing, a little humor. Somebody asked me, if you're so successful, why do you dress like a bum? I don't know. I like comfortable clothes. My kids have nice clothes, though. Anyways, keep things super simple. Make trading a pursuit of pleasure. Make it scalable and reproducible. Make it fun. And enjoy your life. And in the meantime, don't get involved in science projects that are going to potentially put you into situations or environments that can make you go on tilt. That is not running a trading business. That's running a retail, I love to trade business. I don't care. I actually don't like trading, but I want to make a lot of money. So which one is going to give me that end result? Which trade setup is going to deliver the best result? And in between, I'm going to look for the same setups that are fractal to nail and bail. Simple as that. I put the profit target in, it takes me out. I don't want to get down there and think about it. I want it to take me out. Put a target in, I want it to take me out. So that I get down there and go, oh, maybe I should hold it a bit longer, and then it bounces and comes back. Okay? Nail and bail if it's not an ACB, because they're going to come back and get people who are in the money, especially if there's Fed minutes or something else. If it's a first red day, first green day coil, well, that's a different story. Keep things simple. Lock in the money, get off the screen, and get on with your day. Have a great day, traders, and may the markets go with you.